opportunities. Todd?
Okay, our next question here is, I noticed with your conservative setup that the pullback is going to support resistance, but not necessarily the next one. Sometimes it goes through a couple tight levels only to rebound on the 20 moving average. How do you time your entry in that case? Do you wait to see what the level is to choose to rebound on? So let me read that one more time.
Yeah,
I noticed
that one.
Yeah, it's again, these are emails. I mean, how we all type emails.
Sure,
it's kind
sure.
Of, yeah. So
we all
I
know
noticed,
how I type. We all know how I type anyway. So yeah, I
definitely
understand.
That's why you're not allowed to type.
Exactly.
Okay, I noticed with your conservative two-bar setup. I'm going to kind of add a few words here. I noticed with your conservative two-bar setup, going through support or resistance, but not necessarily the next one. Sometimes it goes through a couple of tight levels only to rebound, I'm assuming they meant retrace, on the 20 moving average. How do you time your entry in this case, and do you wait to see what the next level is to retrace on? So I think in a roundabout way, they're asking pretty much the same question about entry off the two-bar move. And so I think, I mean, this is a, I think you've answered that quite well, so I think we could probably move to the next one. If someone in the room has asked that question, if they want to clarify it right now, that'd be great. We'll just
absolutely. If somebody asked that, if somebody wrote that question, we completely understand. Like I said, we all know how I type in the chat room, so I completely understand that if we just don't understand the question, feel free to re-ask it, or if you see an example on the chart here, I'll be more than happy to answer it for you. So other than that, let's move on.
Okay.
Sure.
Okay, next one is another time frame question. I need to learn about taking trades from lower time frame charts, like 5-minute, 500 tick, 200 tick. And you kind of touched on that already, but you might want to elaborate.
Yeah, well, okay. Let's. I need to learn to trade lower time frame trades. I guess my question would be why. Why do you need to learn to trade lower time frame?
Maybe as a scalp. I don't know if it's his technique or something. Perhaps.
Yeah. Well, it sounds like the person's changing their style is what I guess I'm sensing out of that question. The way it says, I need to learn how to trade lower time frame. I guess maybe I'm reading too much into it. I guess that question.
Or Robert, one other way to think about this. You know how we always look at our longer term charts and whittle down to the smaller time frames to actually enter and exit a trade. So maybe that's what he's referring to, but even a more micro level.
Sure. Well, and to that point, let's discuss that for a minute. For those of you that were in my previous like my indicator webinar, you know that I actually have the monthly charts, I have the daily charts, I have the hourly charts, and both 60 and 120 minute type charts. That I look for very specific things that I kind of taught you on those charts when I showed them to you, and then and then we break down to the 15-minute, which is as low as I go, generally speaking. So for a shorter-term time trader, what they would probably, I still believe, just so you understand, even if you're a 1-minute, 5-minute type trader, I still think that you should understand what the macro trends are. Okay, and that's for obvious reasons, because if the monthly, daily, weekly, hourly charts are all on a sell, and then you get my sell signals on your 1-minute or 5-minute charts, what's more likely to happen? It's more likely to be a way nicer move than if the hourly, daily, weekly, monthly are all on buys and you're trying to go ahead and short. It's not as likely to be as fruitful of a trade. So if you're a shorter term time frame trader, a 1-minute, 500 tick chart trader, 5-minute chart, I strongly encourage you to still marry up the longer term trends with the shorter term trends as much as possible. Specifically, the next levels up. So like if you're a 1 or 5 minute trader, a 15-minute and 30-minute and or a 60-minute type chart would be ones you'd want to have going in your favor. Okay, you may not need the monthly and the weeklies going in, and even the daily for that matter, going in your direction. Although generally, just so you know, I'd really prefer people to take trades in the direction of the daily trend. However, that what you really want though, if you're trading in 1 minute, 5 minute charts, look at the 15-minute, look at the 30-minute, 60-minute type charts. If those trends are going your favor, then turn down the microscope or turn up the microscope. Look at your 1 minutes and 5 minutes for my setups and go ahead and execute on those. But at least you have the 15, 30, and 60 type minute charts going in your favor, so you'll get the most bang for your buck out of your trade. Because every time we go into a trade, just keep that in mind. Every time we go into a trade, we risk a lot of money, especially for those of you that aren't disciplined yet enough to go ahead and put your stops in appropriately, and you will risk 10 points to make 1 point. So you're risking a lot of money each time you take a trade. So what you need to do is leverage the odds as much in your favor as possible, and by doing so, making the highest probability trade. This is not Vegas. If this was like Vegas, I wouldn't trade. I would just go to Vegas. I actually don't like to gamble personally as an actual gambler, except for a little bit of fun. I'll go to a craps table or something, when I'm in Vegas down here for like at the seminar I'm speaking at next month. But I am not a gambler. I like probabilities being significantly in my favor, and so for you to get the significance and the probabilities in your favor, you really want those higher time frame charts above you, the next 3 higher levels or so above you, to be in your favor as well. So keep that in mind when you're trading. That's how I'd answer that question. If you're looking to learn how to trade those shorter term time frames, I'd say honor the higher time frame charts first. Todd?
Okay, the next question definitely was just answered a few minutes ago, and I'll just read it for reading's sake, is how do I enter once a trend is underway if I've missed an entry, or if I want to add to the position? And I think you did already discuss that, Mike, but if you want to add to that, that's fine.
Yeah, no, I think we've hit that one to exhaustion. Yeah, I want to make sure we go ahead and save time for open
Sure.
questions here at the end.
Sure.
For people that have new questions that have come up along. We've been at it for about 2.5 hours approximately. I just want to make sure that in the end that we save time for everybody else. So let's keep going on the question list.
Okay, here's another one you somewhat touched on, and you could probably add just a titch to this, is can you show an example of a 2-bar, or give an example of a 2-bar breakout that is likely to fail?
A 2-bar breakout that's
likely to fail. If there's, I guess, associated with opposite trending moving averages.
Yes.
Or something like
Well, no, a 2-bar breakout that's likely to fail is typically one that's gone ahead and exhausted its potential prior to going ahead and moving to the. Here's let's see. I mean, as we look at even on the screen here, we've had a couple that really exhausted themselves quickly. This one here, for instance, we really these 2 bars here were really not a decisive break, and I think I told people that in the student chat room, if I recall. I didn't feel that this was really a decisive 2-bar break. In part because this bar right here. First of all, this one didn't close above 204, but this one went ahead and was about 50% level. So the 2-bar break strategy, ones that are about likely to fail, are ones that go ahead and close about 50% when eyeballing it. Okay, not when you get the ruler out and measure it, but when you eyeball it, does it look like it's anywhere in the 50% level on the bar? This one here, too close to the 50% level. And then the second one, same thing. Both these bars really were well off their highs, almost to the 50% level. Those are the kind of bars that are likely to fail. In fact, right here, you'll see we got the 1 bar up, and it went ahead and failed. You see here we made another attempt. This is only a 1 bar, so it's not even the 2 bar setup. But you see when these things come decisively off their highs, those are the kinds of bar setups that are likely to fail. and that's what I'm trying to, to convey to you here. The other one that's likely to fail is when it's gone ahead and moved a significant amount of time, or I'm sorry, a significant amount of space in a very short amount of time. So when you're moving 10 or 15 points or more in a couple of bars, those are the kind of bars that are likely to go ahead and retrace. Now, in the interest of full disclosure, I traded this, okay? This was actually a setup that I traded. We broke, but we had a nice little hook here, and we went ahead, and even though we had a big move down, I actually traded this, and then I got out on this bar right here, okay, just for full disclosure. But at the same time, I would not recommend this for your average trader, because of the fact that, I'm concerned you've burnt up so much coming down here. I mean, you think about this. Look at this. This was 1205. By the time you got down to here, you were at 1190. You went 15 points in 2 bars. So what could happen? You could have a 4, 5, 6 point retracement. So what you have to do there is you have to be prepared. You have to say, okay, the two types of bars that are likely to fail, the 2-bar setups that are likely to fail, ones that come more than 50% or around 50% off the high, or ones that move too far too fast. And usually, as my rule for that, it's 10 to 15 points in 2 bars. That's too far too fast generally. Okay, so that kind of answers the question there. But just so you understand, though, that's why I have like the scale-in strategy for when we do move too far too fast, because you could throw X number of contracts in here. Remember what I said? Then you'd be prepared to throw your next ones in at my speed lines. And so here, if you threw in, even let's say one contract here, your average is right here, which is at around the 1193 level. It drops all the way down to here, which is around the 1186 area. And you've had plenty of opportunity, even on just 2 contracts, to go ahead and make, 2, 3, 4 points, but yet you significantly minimize your risk after going ahead and having such a sharp drop, which is why I demonstrated the scale-in strategy, a technique that I've used very successfully. So that kind of it reiterates the concept and also answers the question here: what are some that are likely to fail? Ones that move too far too fast, ones that go ahead and pull back around 50% off the high, like as you see here, it did, and as you see here, it did. So you had a 2-bar break above this resistance level. Well, let me rephrase that. You'd have what people would think is a 2-bar break, but this is not Robert's 2-bar setup by any means. And any of you that have been here and have listened to this, I hope you all can see that and say that, yep, 50% off the high, 50% off the high. There was not a 2-bar break here. So, but how many people thought this was a 2-bar break? There was plenty that thought, oh, 2-bar break back above 1204, and here's your pullback bar. But hopefully you can all see that was not the case there. And sure enough, then he turned right around, rolled back, and died again. So there you go, Todd.
Okay, great. Next question is, do you have specific setups for scalping, for, like, example, on non-trending days, just to make a few points here and there?
Yes, yes, I do. And what I would say is, basically, I'm trading. Let me get the thing off here. Okay, there we go. What I'm looking for with non-trending days, or just basically days that are slopping around, I'm looking for trades. This is when I'm feeling aggressive. Remember we talked earlier about not trading? In fact, Todd, I think you and I just had a conversation the other day about, well, there was a morning I was not in the zone. Remember that? You were asking me, did I catch that move or whatever, and I said no. I'm a little slow to start today. I'm not on that initial move. So when I'm not feeling 100%, I go ahead and I stay out. Whether mega move or whether scalping. As far as for scalping, though, what I generally like to do is just identify which way the market is moving on a very short-term basis, because even if we're in a non-trending market, what you'll see here is that, let me see if I can find, well, I guess it really doesn't matter. Any of these days will apply. If I'll look for trades around my 3 to 5s. Okay, if I'm looking to scalp, I'll look for trades around the 3 to 5s, and that might be the time where I'll go ahead and I'll go down to a 5-minute chart. And so as we're sloshing back and forth, I'll look for pullbacks to the rising 3 to 5 moving averages, or I'll look for pullbacks to a falling 3 to 5 on a 5-minute type chart. That's about when I turn up my microscope for scalping techniques, that's how I'll do something like that. That being said, again, I do not come into each day looking for trades that are scalps. I just want to make sure people understand that. I am not really a scalper by nature. But when I do get aggressive, and there are those days where I do get aggressive and want to turn the microscope up a little bit, and if we're in a non-trending day, if I choose not to sit aside, I'll go ahead and I'll look at a little bit lower time frame, which in this case about the lowest I really go is about the 5-minute chart, just to go ahead and see if I see some pullback opportunities to my 3 to 5 moving average. Todd? Hey, Todd?
Yeah, can you hear me?
Yes.
Okay. The question is, do you ever take an entry between your levels, like a trend following entry?
Yes. And that's, I mean, frankly, that's kind of what it's all about. What we're doing is you're looking for, and let's say a break above, a level, and then you're looking for a pullback, and that pullback should happen right in the middle of the levels, because the whole idea is you go ahead, you pull back then to your rising support, and then you ride the trend to your next level. So I would submit to you that all of my trades are kind of most of my trades are with the mindset that I'm going to break a level, pull back, and then look for the ride to the next level off of support, and that's how I do it.
Okay. Next question is a fish hook question. So he's basically asking a pullback on a fish hook to a speed line. Would that be a good entry? And I have a follow-up with that. Is with fish hooks in general, what's an example or a situation in which a fish hook is likely to fail? So kind of a two-part question.
Okay. Well, first of all, hey, Todd, just so you know, your microphone was really bad on that last time.
I had my hand through my mouth. I'm sorry.
Okay. If anybody wants to type Todd a question and ask him why he had his hand in front of his mouth, you're welcome to it. But as far as the fish hook, absolutely a pullback. Let's go ahead and turn on our little fish hook screener here. A fish hook at a fish hook or a bent finger that hits the 20 period, or excuse me, the 3 and 5 periods is actually generally speaking, a fairly higher probability type trade. So, because if you think about this for a minute, if the pullback, or if the fish hook goes ahead and let's say the market's moving up this way, if the fish hook would pull all the way back down to the 20 period moving average, that would actually be too steep. I don't like to see that. As you know, what I like to do based on what you learned is, and here's the bent finger right here, see it? And that pulled right back to my 3 to 5. So actually the 3 to 5 bent finger or fish hook is actually ideal if it pulls back to the 3 to 5 period moving average. But you see here, what happens, the only time where that would not be the case is, again, if you have too steep of a pullback. And see from here to here, it's kind of too steep. And this answers the second part of the question too. So first of all, in summary, yes, a fish hook or a bent finger to the 3 to 5 generally is a good thing. However, if you have gone ahead and just recently had a fish hook in the opposite trend and you get another fish hook, they can be higher risk. And so what I mean by that is, let me scrape this off here. Okay, this was a good bent finger. It was a rally. It'd been rallying for a couple of bars. and it went ahead and made a fish hook, or I'm sorry, bent finger. Went ahead and hit resistance, stopped at resistance, so it was only good for a couple, 2.5 points. Then it started falling, and all of a sudden tried to make another fish hook right there. Now, the thing is, though, there was no trend here. Was there a trend to the downside? Absolutely not. The trend had actually been to the upside. So this fish hook, when are they likely to fail? When their counter trend is when they're likely to fail. What we're really looking for is if you're going to go ahead and take a fish hook that's going to go ahead and pull back or a bent finger, you want to, so if you're going to go long, you want the bent finger to go ahead and be giving you a signal to the long side. What you don't want to have happen, let me draw it, is all of a sudden, you've got this move to the upside, and all of a sudden you have like one bar down below, and you're suddenly taking a fish hook right on the other side of a buy fish hook over here. It moves around one time, and then suddenly you're taking a sell fish hook. This is a counter trend trade because the trend has been up. I do not recommend it. I don't suggest it. Here you had the 20 period moving up, so you were in the right direction of the hook, okay, or the bent finger in this case. Here you had a sell side hook, which again, keep in mind, it was very steep. First of all, it was down like this and up like this. Can everybody see that? You know how steep that was. That is not my usual fish hook. When it retraces 50% or more back up, I don't like those kind of fish hooks. I'm looking for that more shallow type fall versus this. And I drew a lot of those last week in the webinar from the setups webinar. So go back and for those of you that had the webinar, go back and watch that to really ingrain that. So when are they likely to fail? When your fish hook is counter trend. Okay. And Todd?
Yeah. Okay. I have a quick question. Is how often are you trading off a line chart versus a bar chart? Because I normally see you trading off bar charts, but how often do you look at your actual line chart?
The only reason I had the line chart on is if I see I've gotten very good. What you got to understand. In fact, I think
you flip back and forth.
Yeah, I've demonstrated this before. I can usually see, I mean, most of the time you can see, when you've trained yourself to do so, I can see the fish hook forming mentally right off of the pattern. I don't have to go ahead. Like here, I see a couple up bars and I see it roll over. I'll bet you that bar right there was a fish hook. Oh, okay, it was the bent finger. Okay, you can kind of see it forming. Okay, mentally. So I don't need to have the X-ray vision turned on, if you will, for the bar chart. But and that's why I mentioned last week to people was I recommended the line chart as you're getting used to or newer to the concept of like the fish hook. So I guess in closing on the question, I only turn the line chart on when I'm not quite sure if something's actually a fish hook or not by looking at it on my candle chart.
Okay, and just a small follow-up to that is when a fish hook is forming, when exactly do you want to enter in that, or do you want to start scaling in? Do you want to wait for the close, or as it's kind of wiggling back and forth and it's looking pretty fishy, if you will, do you want to start scaling in?
Okay. Did that question just get asked?
Yeah, it was Joe. I had to sneak that one in for him.
Joe, what did I say a little bit ago? Wait till the bar closes, because trust me. In fact, come on, Todd. You seen that last week live in the chat room. Fish hooks cannot become fish hooks by the time the bar closes. How many times did you see that? Okay.
Exactly.
Joe, hand slap for you. Wait till the bar closes.
And we're getting some comments on that one. Okay, next question here.
I hope those comments were everybody slapping Joe.
No, it's Joe slapping himself, actually.
Oh, good. Okay.
Probably with a wet fish or something.
That's right. Excellent.
Next question is, how do you use the VIX to decide on entries and exits?
Good question. Okay. First of all, these were open questions, so are we through this section, Todd?
It was a very appropriate question, and I got that question a lot in the chat room this week, so I figured we might as well throw it out there at this time. So
okay. I didn't know where we were in the questions.
No, yeah, this is the longest section, so we're kind of about 2/3 of the way through.
Okay. Let's go ahead and let's see. We go ahead and answer the VIX
Oh, yeah,
question.
okay. So the next question is, how do you use the VIX to decide on entry and exit points?
Okay. Well, what I like to do is with my VIX is I want to go ahead here. Let's do this. Can I move that? There we go. If I'm looking to go ahead and go short the market, I want the VIX to be above my moving averages. I want them to go ahead and, again, give me trend confirmation here. So what you'll see is I want my moving averages, in this case the shorter term moving averages, such as the 20 and my other short-term moving averages, I want them to be rising, okay? Because remember, when the VIX is going up, the market is likely going down. They're kind of an inverse relationship to each other. So the biggest way that I use the VIX is as a counter trend tool. And sometimes, just like the RSI, and that's why I told you, sometimes the RSI gives me better indicators. So does the VIX with, with setups too. So I look for a couple things. If I'm looking to go short, I like the VIX to have an RSI above 50. Why? Because that's a stronger trend, and so if the VIX is going up, the market's likely going down. Okay, and conversely, if the VIX is going down and below 50, the market is likely going up. Okay, so that's kind of what I look for there. Is the VIX basically trending the opposite way and has support, moving average type support, and RSI type, support and resistance above or below the 50, on it. That's kind of what I'm looking for there. And if that agrees, then that's one more notch in the belt for me to say, okay, I'm seeing a confluence of indicators on multiple financial instruments and indices that are saying the same thing to me. I'm getting the same message from different markets. And I like the VIX because it is an inverse indicator. So if I'm reading it correctly and it's moving correctly, it will help lead me towards a good signal on the S&P trade. On the other chart, I just want to show you that one real quickly. Same concept. What I'm looking for, and we discussed this a little bit earlier. I believe it was Mike, if I recall, that asked the question earlier about the this chart. So same concept. What I'm looking for is these channels to be rising if I'm looking to short, and these channels to be falling if I'm looking to go long. Okay, those are a couple of the key things that I'm looking for, as it relates to the VIX. Okay, that's about all I look at really for the VIX. I look for them acting the certain way around my indicators. As I showed in the indicator webinar, what the different indicators were and the lengths and everything else and all that. So. Just understand that's kind of how I'm looking for them. Are they trending the opposite way of what I expect the S&P to be trading? And once I get that confirmation, then that's one more notch in the belt to make the trade with the S&P. Todd?
Okay, this next question, you're really going to have to struggle. You're really going to have to struggle to find an answer for this one, but I bet you can dig deep and find it. You mentioned it's been a while since you've had a loss scaling in. Can you give an example of one of your losses?
Well, actually, I wish that question would have been asked in advance. I could have perhaps found a trading statement, and actually reviewed that. But yeah, no, what I think I said was that the losses, as far as the scaling, what happens is usually with the losses. The losses are usually early on, and then what I do is go ahead and add more contracts in near the resistance level to go ahead and compensate for the trade. So let me go back to last week's webinar, because I actually demonstrated that in last weekend's webinar. Was the person that asked that question in last week's webinar?
You know, Robert, I really don't know who asked these questions because I consolidated them all from all the different sources.
Oh, okay. Well, because I showed that in last weekend's webinar, how that actually worked out. So I'm trying to right now take us back to that, the day of the webinar, see if I can show, I discussed the example of how I'd scaled in. Um, let's see here.